So, trying to keep up with crypto rewards these days, it can feel, pretty complicated, like deciphering an ancient language sometimes.
Yeah, it's definitely a lot. Stake here, yield farm there, points this way.
Hmm.
It gets overwhelming fast.
Exactly. But what if there was a way to, like, cut through all that noise and maybe earn more without such a headache?
Well, that's kind of the core challenge KernelDAO seems to be trying to deal with. We've been looking through their materials, and they're building what looks like a simplified ecosystem
Okay.
for navigating this whole complex world of, staked crypto assets.
Right. Okay. Let's unpack this then. KernelDAO. What exactly is it for someone who's just trying to make sense of all this? The sources call it a restaking ecosystem.
Right. So basically, think of it like, well, imagine you've already staked your crypto, right? Maybe to help secure it in a network, earn some rewards for doing that.
Yeah. Standard staking.
Okay, so restaking takes those same staked assets and puts them to work securing like additional networks or applications at the same time, which could potentially stack up even more rewards. KernelDAO is essentially building a platform
Hmm.
on both Ethereum and BNB chain to make this whole restaking thing much more user-friendly.
Gotcha.
Their main goal is really to boost the overall usefulness of your staked assets, things like ETH, BTC, BNB, strengthen network security, improve liquidity, how easily those assets can be traded.
And ultimately generate better returns for you.
Exactly.
So it's like making your already working money work even harder, maybe in more places at once.
That's a good way to put it, yeah. And the central piece holding this all together is their own token, Kernel.
Okay, Kernel.
Yeah, it's designed to be useful within their ecosystem, and it also gives holders, a say in how things are run.
How so? What does it do?
Well, for example, by staking Kernel, you can actually help secure applications built on their platform, and
Hmm.
even on Eigenlayer, which is a huge name in this whole restaking space.
Right, Eigenlayer.
So think of it like adding another layer of security to the whole digital landscape.
Interesting. So staking Kernel helps secure other things. It's not just sitting there earning interest for itself.
Right. It has a direct utility in securing the network. And another key benefit of staked kernel is that it provides a kind of safety net. They call it slashing insurance.
Slashing insurance.
Yeah, for their liquid restaking token or a SITH, which we'll talk about. And for the kernel platform itself, it can offer, some peace of mind for users.
Okay, that makes sense.
Plus, if you hold kernel, you get voting rights on governance stuff. So you can actually participate in shaping the future of the protocol.
Right. Governance is pretty standard.
And there's also the potential for airdrops, basically free tokens from other projects that build within the kernel ecosystem.
Okay, so Kernel sounds like it has several potential perks. Now, the sources point out three main products within KernelDAO. There's Kernel, Kelp, and Gain. Let's maybe take them one by one, starting with Kernel.
Sure. So Kernel, the product, is focused on shared security, specifically within the BNB chain ecosystem. It lets users restake BNB, BTC, and other assets that already earn rewards.
Okay, BNB chain focus.
Exactly. And what's really interesting is how quickly it's grown. The sources say over $630 million worth of assets locked in.
Wow.
Yeah, and more than 30 different projects are already using it. It seems to be becoming a pretty foundational piece of infrastructure on BNB chain.
630 million plus in TVL already. What do you think is like driving that kind of adoption on BNB chain?
Well, a few things probably. I mean, the demand for getting better yields on stake assets is obviously huge. Kernel gives users a way to potentially earn more without adding a ton of complexity on their end.
Right.
And also, by providing this shared security, it kind of lowers the barrier for new protocols to launch securely on BNB chain. That helps the whole ecosystem grow,
Yeah, makes it easier for new projects.
which in turn attracts more users and, more value.
That makes sense, sort of a rising tide lifts all boats situation.
Okay.
What about Kelp? The sources refer to it as RCETH.
Right. Kelp is their liquid restaking token, RCETH, and this one's on Ethereum.
Okay, Ethereum side.
Yeah. And what's neat about it is that it accepts various different ETH-based assets as collateral, not just ETH itself.
Ah, okay.
And this gives users instant access to the value of their restaked assets, that's the liquid part, while also aiming for, potentially higher rewards.
And the numbers there.
Again, pretty impressive. Over $1.2 billion in TVL.
Billion with a B.
Yeah. And integrations with over 150 DeFi platforms
Wow.
across more than 10 layer 2 networks. So you'll find RCETH being used in major protocols like Aave, Spark, Morpho, Compound, places like that.
That's huge integration. That kind of widespread adoption really suggests that, major DeFi players see the value and security in RC.
Exactly. Which can translate to more opportunities and potentially better yields for you if you decide to use it.
So let me get this straight. If you stake your ETH or other ETH-based token through Kelp, you get RCETH back.
Mm-hmm.
And then you can take that RCETH and use it in other DeFi activities like lending or borrowing,
Yeah.
potentially boosting your overall returns. It's like unlocking the value.
Precisely. It turns those otherwise locked staked assets into something you can actively use again in the DeFi space.
Okay, cool. And finally, there's Gain. That's described as automated non-custodial vaults. What's the idea there?
So Game is basically a set of automated vaults. They operate across different blockchains, and they handle the often really complicated process of earning various rewards. Could be airdrops, could be yield-forming rewards, points, things like that.
Automated, okay.
And the non-custodial part is really key. It means you always maintain control of your crypto. They don't hold it for you.
Right. You keep your keys.
Exactly. They currently have over $130 million in TVL on Ethereum across 4 main vaults and about 15,000 users.
Okay.
Examples they mention are an airdrop gain vault called ETH and a high-growth vault, HGE. The whole point is to simplify access to these potentially complex reward strategies without you having to actively manage every single step.
Right. Kind of a set-it-and-forget-it approach to complex DeFi stuff.
Sort of, yeah. Aiming for that convenience.
Okay, so Kernel for boosting security and rewards on BNB chain, Kelp for making staked ETH liquid and more rewarding on Ethereum, and Gain as maybe a more hands-off way to tap into different reward streams. It definitely looks like they're trying to tackle that complexity from multiple angles.
It seems that way.
Now, let's talk a bit about, how this all works under the hood. Maybe not super deep, but the basics.
Okay. For Kernel on BNB chain, the core tech is what they call pooled security architecture.
Pooled security.
Yeah, think of it like a neighborhood watch program for blockchains, maybe.
Okay, I like that analogy.
Instead of each new building or project having to hire its own massive security team, they pool their resources. They contribute to a shared security layer.
Makes sense.
So for protocols building on BNB chain, Kernel offers this shared security. It makes it cheaper and easier for them to launch securely, which, ultimately benefits the entire ecosystem. It's about efficiency and helping the network scale better.
That's a great analogy. Pooling resources makes things more efficient, more secure for everyone involved. And for Kelp's ETH on Ethereum, what's the tech focus there?
With ETH, the design goal is really to be a leading liquid restaking token. So the focus is on making that restaked ETH as liquid and usable as possible within the Ethereum DeFi world.
Right, usability.
Yeah. Its technical design really prioritizes smooth integration with all those other DeFi protocols. That's why you see it adopted so widely on platforms like Evolve and Spark.
Okay.
The goal is just to make sure that your restake ETH isn't just sitting there passively earning staking rewards, but can also be actively used to potentially earn even more through DeFi.
And how does Gain automate these different strategies? You said it's non-custodial, so how does it work without you having to constantly monitor and click buttons?
Right. So Gain uses a pretty sophisticated system of non-custodial smart contracts.
Smart contracts, I call them.
These contracts are basically programmed to automatically interact with various DeFi protocols and potentially, down the line, even CeDeFi or real-world asset protocols. RWAs too.
Yeah.
Interesting.
Yeah, they mentioned that in the future plans. So these contracts automatically pursue different reward-generating opportunities based on their programming. The technology handles the execution, aiming to optimize returns and just simplify the user experience. You don't need to understand the nitty-gritty of every single underlying protocol it interacts with.
Okay, that makes sense. Let's switch gears a bit and talk about the Kernel token itself. We know there were a couple of private token sales, and there's this upcoming Binance mega drop. What can you tell us about the tokenomics for someone trying to understand its potential value, maybe?
Sure. So KernelDAO raised about $10.5 million through 2 private token sales. And those sales represented roughly 15.88% of the total kernel supply.
Okay.
The total and maximum number of kernel tokens that will ever exist is capped at 1 billion. That's the hard cap.
1 billion tokens.
Yep. And when it first becomes publicly tradable, the initial circulating supply is expected to be around 162.3 million tokens. So that's about 16.23% of the total supply circulating initially. Got it. 16.23% at launch. And the Binance mega drop is part of that initial circulating supply.
Yes, exactly. The Binance mega drop is allocating 80 million kernel tokens. That's a decent chunk, 8% of the total supply.
Right.
Half of those tokens, so 40 million, will be unlocked and available right at the launch, which the source mentions as April 8th, 2025.
Okay.
And the other half, the other 40 million, gets released 6 months after that.
Okay, so a significant portion of those initially available tokens will come from that mega drop in those early private sales we mentioned.
That's right.
How are the rest of those initial tokens, that initial 16.23%, being distributed? Do we have a sense of that?
Well, we don't have like a super detailed pie chart for every single percentage right at launch in the materials we looked at, but we do know the overall initial circulating supply is that 16.23%.
Okay.
The available information does give a helpful snapshot, though, of where these initial tokens are generally allocated. Gives you a sense of the early distribution picture.
Okay, let's maybe look at that initial distribution a bit more closely then. The report mentions both a day one circulating percentage and a day one real float percentage. And interestingly, they're both listed as 16.23%.
Right.
What's the difference between those two terms usually? And what does it tell us that they're the same here?
Good question. So the day one circulating percentage usually refers to the number of tokens that are technically unlocked on the blockchain according to the vesting schedule or release plan.
Okay, the technical unlock.
Yeah. The day one real float percentage, on the other hand, is more of an estimate of the tokens that are actually expected to be actively circulating and readily available for trading in the market. Sometimes there's a difference if, say, team tokens unlock but are expected to be held long term.
Ah, I see.
The fact that these two numbers are the same here, 16.23%, suggests a pretty straightforward initial unlocking process. It implies they don't expect major discrepancies between what's technically unlocked and what's likely to be actually available for trading right away.
That makes sense. And how is that initial 16.23% split between, say, individual users or retail versus larger entities or institutions?
The data suggests that a pretty significant portion, around 13.20% of the total supply, is allocated to individual users. That comes through things like airdrops and other user reward programs.
Okay, 13.2% to users.
Then the Binance Megadrop accounts for another 8.05% of the total supply going to users, although half is locked initially, as we said.
Right.
And then there are allocations for marketing on crypto exchanges, making up about 1.15%. So quite a bit initially aimed at retail or active users.
And on the more institutional side?
On that side, roughly 3.00% of the total supply is earmarked for ecosystem development and strategic partnerships. The notes mention the intention is to use some of these for things like providing initial liquidity on exchanges, which is pretty standard.
Okay, that's useful context for understanding who might be holding Kernel early on. The report also mentions something called an airdrop cluster analysis. What were the key takeaways from that part?
Right. The airdrop cluster analysis. It shows that roughly 10% of the total kernel supply was allocated for the first season of airdrops, rewarding early users and participants.
10% for Season 1 airdrops.
Yeah. And of that 10%, about 8.05% was unlocked right at the initial launch. The remainder, so about 1.95%, is being released gradually over the following 3 months. Vesting, basically.
Okay, got it.
Interestingly, the analysis also found that around 5.89% of the total supply was held by the top 2,000 wallets right after the launch.
Top 2,000 wallets holding nearly 6%.
Yeah. It gives you an idea of the concentration of token ownership in those very early stages. It's not necessarily a red flag on its own, but it's, something to be aware of when looking at distribution.
Definitely. And for anyone who really wants to dig even deeper, the report apparently provides some of the actual blockchain wallet addresses for these different allocations at launch.
Yes, that's right. For transparency, they've made public some of the key wallet addresses. These are linked to things like the community rewards and airdrops bucket, the mega drop and exchange marketing funds, the private token sale proceeds or allocations, influencer marketing, reserves for any future fundraising, the team's allocation, and the tokens set aside for ecosystem and strategic partners.
Okay.
Obviously, these are long strings of letters and numbers, very technical, but it does offer a high level of visibility into how that initial distribution is actually structured on-chain.
Good for transparency.
Yeah.
Now, let's look ahead a bit. Thinking about what KernelDAO has achieved so far and what they're planning next, the roadmap highlights some pretty impressive milestones already completed. What stands out to you as particularly significant from their track record?
Well, honestly, what's really striking is just the pace at which they seem to have been building and getting traction.
Yeah.
I mean, launching their Kelp liquid restaking token, Scores ETH, on Ethereum mainnet back in late 2023. And then seeing it quickly surpass, what was it, $1 billion in total value, locked by Q2 2024. That's a major achievement in a competitive space.
Definitely.
Similarly, launching the game product line in Q3 2024 and seeing that cross $100 million in TVL fairly quickly shows there's real user interest there too.
Right.
And then you have RS ETH getting integrated into major DeFi platforms like Arav and Spark, plus Kernel launching on BNB chain and attracting over $600 million in assets quite fast. These are all pretty significant indicators of progress and actual adoption. They're not just ideas on paper.
Absolutely. It shows they're not just theoretical, they're actively deploying code and people are actually using it, locking up significant value. So what are they focusing on in the near term, specifically, say, in the second quarter of 2025, which is now?
Right. For the current quarter, Q2 2025, the focus for Kernel, the BNB chain product, is launching its operator testnet.
Operator testing.
Yeah, that's an important step in sort of further developing and battle testing its core infrastructure before a full mainnet launch. For Gain, the automated vaults, they're planning to expand their offerings with new vaults, specifically for stablecoins and even for Bitcoin.
Oh, BTC vaults too. Interesting.
Yeah, that would definitely broaden its appeal quite a bit. And for Kelp, the RS token, the priority seems to be getting RS integrated into Arbi's layer 2 markets, like on Optimism or Arbitrum.
Okay, expanding L2 presence.
Exactly. And also working to increase the capacity, the limits on how much Darius can be used on the major lending platforms where it's already listed.
So, sounds like continued growth and deeper integration across all three of their main product lines.
Yeah.
The roadmap also gives us a little peek into Q3 2025. What can we maybe expect then?
Looking ahead to Q3, Kernel is aiming to launch its operator mainnet, so moving beyond the testnet, and also a middleware testnet. These steps would further solidify its foundational technology on BNB chain.
Okay, mainnet launch for kernel operators.
For Gain, they're exploring expansion into the realm of real-world assets, RWAs, and also centralized finance, or CeDeFi, through their vaults. That could be a really interesting development, bridging TradFi and DeFi.
Yeah, RWAs are a hot topic.
Definitely. And Kelp will likely continue its strategy of expanding to more Layer 2 networks and just increasing its capacity and utility on existing lending markets. Consistent expansion.
It certainly sounds like they have pretty ambitious plans for sustained growth and getting more deeply embedded within the wider DeFi ecosystem and maybe even beyond. Outside of just the technical roadmap, what's happening on the sort of business and partnership front? Anything noteworthy there?
Yeah, there's definitely some significant momentum on the business development side mentioned in the sources. The launch of that $40 million KernelDAO ecosystem fund, supported by various collaborators, is a big deal. It signals a strong commitment to actually fostering growth and innovation within their own ecosystem.
Right, investing back into their platform.
Exactly. And the fact that Kelp's RSETH has been officially whitelisted for borrowing on major lending protocols like Ahav and Compound, that's huge. It significantly increases its utility and how easily people can access and use it.
Yeah, getting whitelisted on Afi Compound is a big stamp of approval.
For sure. Then there's the integration of native liquid restaking directly within Ledger hardware wallets. That has the potential to reach a massive user base. The source mentions potentially over 10 million Ledger users.
Wow, direct integration with Ledger.
Yeah, making it much easier for Ledger users to participate. And finally, the whitelisting of both ETH from Kelp and ETH from Gain on the Morpho lending protocol further expands their reach and usability within DeFi.
Okay, it definitely seems like they're building a strong network of partnerships and integrations, not just building tech in isolation. For listeners who might want to learn more after this, or maybe get involved with the KernelDAO community, where should they look?
Yeah, the best places to connect are usually through their main online channels. You can find them on Twitter. The handles mentioned are at KernelDAO and at KelpDAO.
Okay, at KernelDAO and at KelpDAO on Twitter.
Right. They also have active communities on Telegram and Discord, which are usually good for more direct engagement and asking questions.
Telegram and Discord, too.
And for more detailed information, like deep dives into how things work, or the latest official updates, their official blog and their documentation website are probably the most valuable resources.
Got it. Blog and docs for the details. Okay, so to try and bring it all together then, what are the key things someone should really remember from our deep dive into KernelDAO today?
I think the main takeaway is that KernelDAO is building this comprehensive ecosystem. It's really designed to simplify the whole process of restaking crypto assets and earning rewards, and doing that across different blockchain networks, specifically Ethereum and BNB chain right now.
Right, simplification and cross-chain.
Yeah. through their three core products: Kernel for BNB chain security and rewards, Kelp for liquid ETH restaking, and Game for automated reward vaults. They're really aiming to offer users potentially enhanced yield opportunities and just more streamlined access to the often very complex world of decentralized finance.
Yeah, it really seems like they're trying hard to make the potential benefits of staked crypto, especially restaking, more accessible to a wider audience, by tackling that complexity head on with these different tools.
Hmm.
It kind of leaves you wondering, though, how might platforms like KernelDAO, if they succeed, ultimately change the way individuals interact with and, profit from their staked crypto assets in the future?
That's a great question.
Yeah, thinking about the implications of making these complex DeFi strategies much easier to access, it's definitely a thought-provoking question to maybe mull over.